Hi, I'm Montana Yorke, your host here at Cambridge House, and I am joined today by the one and only Nick Barisheff, CEO and President of Bullion Management Group. Nick, thank you so much for being here today.
Oh, you're welcome. My pleasure.
Awesome. Nick, as someone who is widely recognized as a bullion expert, what's catching your eye on today's market?
Well, I think that what's on everybody's mind is inflation. The latest numbers at 7.5% are the highest in 40 years. So that's on everybody's mind, and that typically is positive for gold until we get to the point where the real interest rates are higher than the inflation rate. It's going to be positive for gold. The other main thing is that the published inflation rate at 7.5% is nowhere close to reality. John Williams publishes an inflation rate from the late 80s that uses that same methodology. And using that, he gets 15% a year now already. And that's quite a gap when you consider interest rates are 2%. So, that the difference is what investors are losing on any fixed income investments. But today I just found a chart from Bloomberg, and they have several items listed, but like, for instance, coffee is up 92%, natural gas 81%, crude oil 66%. So the inflation rate is much, much higher than the official 7.5.
Right. So with these inflation rates coming into play, would you say that you are currently deploying capital into the market at all?
Well, the way our funds are set up, we have a fixed investment policy. So as money comes in, we simply buy bullion depending on which fund it is. So we're in the market on a daily basis, and that was primary intent. So there was no people sort of interfering with your bullion. You decide when to buy it. We make sure that it's there in physical form. So that is ongoing. And today, like if we compare today to the 70s, we've got another factor, and that is that in the 70s, we had half decent increases in GDP. So now with the supply chain crisis and people not showing up for work, you've got a declining GDP, rising inflation, which then we get the worst of both worlds, which is stagflation. And we're clearly in that. And it's the stagflationary conditions that gold does the best in.
Great. And then do you mind walking me through your current portfolio?
Well, because of who I am, my portfolio is only in bullion. And it's not that I have anything again. I had invested in mining stocks up till 2012, but then they at that point they diverged. The mining stocks were outpacing bullion, and then they declined. Now they've caught up again. But the problem that many people aren't aware of is that if you have a broad market decline, then the mining stocks will tend to go down by a much greater percentage than the broad equity markets, even if the price of gold is rising. So to me, the strategy is we're way past a equity market decline. Some of the valuation metrics are similar to 1929. So we're overdue for that. So investors are better off waiting and then buying at the bottom, and there'll be huge discounts at that point.
Do you have any other tips or tricks for junior investors in my audience?
Well, right now, I think that's the important thing is an abundance of caution. Like people have got used to, having a positive trend as the markets went up. But like I say, we're into very dangerous areas. And for some of your investors, we have a second site. We have the BMG Group website, and we got a BMG DIY site, just do-it-yourself investors. So in there's a great deal of investing information. It's like an information portal on every aspect of investing. So those that are doing it themselves, that will give them a lot of assistance there.
Great. And if my listeners wanted to find those exact website details, what are they, Nick?
So the main site is bmg-group.com, and the other one is bmgdiyinvestor.com.
Great. Thank you so much, Nick.
Okay, my pleasure.